Here's something most traders overlook. The candle only shows the result. Order flow shows the fight that got you there. In the next few minutes, I'll walk you through how to read the battle between buyers and sellers, how to spot when one side is being absorbed, when traders may be getting trapped, and why a strong-looking move isn't always a strong trade. A candle is a summary. Open, high, low, close. That's it. Two candles can look completely identical and yet have completely different activity behind them. One green candle can be driven by committed buying that wants to continue. Another with the exact same shape can be short covering into a wall of patient sellers ready to stall. If you only trade the candle, you're reading the outcome after the fight is over. Order flow lets you watch the fight while it's happening. Order flow does not guarantee anything. It is decision support, not certainty, but it can give you far better information before you commit, and that's what this video is about. This is educational only, and nothing here is a signal to buy or sell. So what is order flow? It's simply the live record of transactions. Who traded, at what price, and whether they were aggressive or patient about it. Every candle you've ever looked at is built from thousands of these individual transactions. Order flow just refuses to hide them. To read it, you need one core distinction, and almost everything else follows from it. Market orders are aggressive. They cross the spread and take whatever liquidity is available right now because that trader wants in or out immediately. Limit orders are passive. They sit in the book and wait, providing the liquidity that aggressive traders consume. Aggression versus patience. Price only moves when the aggressive side consumes what the passive side is offering, so watching which side is aggressive and whether that aggression is actually getting paid with movement tells you far more than the shape of the candle. Keep that pair in mind for the rest of this video. Market orders take, limit orders wait. When you can see both sides at every price, the chart stops being a picture and starts being a conversation. Aggressive buyers lift the ask. They pay up to get in. Aggressive sellers hit the bid. They sell into whatever's bid. A footprint chart shows you exactly how much of each happened at every single price level inside every bar. That's the kind of chart you're watching now. Each cell splits the volume into trades done at the bid and trades done at the ask. Comparing those two numbers, level by level, shows you where the aggression actually concentrated. Not across the whole candle, at each price. Maybe buyers pressed hard at the low of the bar and went quiet at the high. Maybe sellers leaned in near a key level and price refused to break. The candle averages all of that into one shape. The footprint keeps the detail. You don't need to read every number. You're looking for where the fight concentrated and who was winning it at the prices that matter. That read takes practice, but it's a skill, not a talent. And it starts with knowing which column belongs to whom. Add up the ask side volume, subtract the bid side volume, and you get delta, the net aggression in the bar. Here's the part people get wrong. Delta is not a signal by itself. Positive delta near the highs can be bullish if price keeps going. But that same positive delta can be a warning if buyers were aggressive and price still couldn't push higher, because it may mean that buying is being absorbed by patient sellers and the move is running out of road. The exact same number, opposite meanings, and only context separates them. So instead of asking whether delta is positive or negative, ask whether the aggression got paid. Aggressive buying that produces new highs is doing its job. Aggressive buying that produces nothing is a clue. Divergences matter too. Price making a new high while delta weakens tells you the pressure behind the move is thinning. None of this predicts the next tick. It's evidence about who is trying and whether the market is rewarding them. Treat delta as a question, not an answer. An imbalance is when one side heavily dominates a single price level. Far more volume trading at the ask than the bid across a level, or the reverse. It marks a spot where one side pressed hard. A single imbalance on its own doesn't mean much. Markets print them all day. What's more interesting is when they stack, several imbalanced levels in a row in the same direction, at a place on the chart that already matters. Stacked buying imbalances pushing into a prior high, or stacked selling imbalances defending a level, can give you context for where support or resistance may actually sit, because they show you where real aggression met real size. Context, not a promise. An imbalance tells you what already happened at that price. It doesn't obligate the market to respect it next time. Mark the level, watch how price behaves when it returns, and let the new flow confirm or deny the old story. Absorption is one of the most useful things order flow can show you. Imagine sellers hitting the bid again and again, heavy volume printing at level after level, and price just won't break lower. That can mean passive buyers are quietly soaking up all of that selling with resting orders. Lots of volume, very little movement. That combination is the tell. Think about what it implies. The aggressive side is spending real money to push, and the market isn't paying them with movement. Someone is on the other side of every one of those trades, and they're not flinching. It doesn't guarantee a reversal. Absorption can fail, and the level can still break on the next wave. But it tells you the aggressive side may be getting nowhere, and that's exactly the kind of information the candle hides. On a candle chart, absorption often looks like nothing at all, a small, boring bar. Under the surface, it can be the most contested bar on the screen. Exhaustion is the flip side of absorption. Aggression spikes, then fades. One last push with shrinking participation and no follow-through. When the aggressive side runs out of fuel, the move often stalls. Again, context, not a trigger. Now put the pieces together, because this is where it gets practical. Price breaks out above a level. Aggressive traders pile in, chasing it. The footprint shows heavy buying at the ask right at the highs. Then the move fails, and price reverses back through the breakout point. All of those late buyers are now offside, holding losing positions with a decision to make. As they give up and sell to get out, their exits can actually feed the move against them. That's trap traders, and it's one of the cleanest stories order flow can help you see forming in real time. Aggression, no progress, then the unwind. You're not predicting it. You're watching the ingredients assemble and adjusting how much you trust the breakout accordingly. So how do you actually use this? Order flow works best, helping you time an idea you already have, not generating ideas from nothing. Say you're watching a level you care about from your own preparation, and price returns to it. Now the footprint becomes your evidence stream. Is selling being absorbed there? Is delta shifting your way? Are late shorts getting trapped? When the level and the flow agree, that can support the decision to act. It does not replace a plan, and it does not replace risk management. It's one more piece of evidence. Exits are where this really earns its keep. Reasons to consider getting out: momentum fading, pressure weakening, absorption showing up against your position, or clear exhaustion in your own direction. None of these are automatic sell buttons. They're signs the conditions that justified the trade may be changing, and they let you make that call on evidence instead of emotion. Plenty of traders enter well and exit badly. Watching the flow after you're in, with responses you decided in advance, is one of the most direct ways to improve without changing anything else about your trading. A few common mistakes worth naming: treating delta like a buy and sell button, reading a single imbalance in isolation with no location and no context, chasing the biggest candle on the screen because it feels strong, and overtrading, reacting to every print instead of waiting for a full picture to form. Order flow rewards patience, not itchy fingers. Here's where software comes in. All of the reads in this video are pattern recognition, and pattern recognition is exactly what tools do well. Software can flag repeated conditions, imbalances, absorption zones, exhaustion prints, faster and more consistently than your eye can, especially when you're tired or emotional. But be clear about this: automation does not create an edge. If a read has no value done by hand, it has no value automated. What tools change is consistency. The same definition applied the same way every time, with a record you can review. And anything you build or buy should be tested in simulation first, long before real money is involved. That's the role Imprint plays. It's a tool suite for NinjaTrader 8 that structures order flow analysis, consistent footprint views, clear labeling of conditions like imbalances and absorption, and a repeatable way to review your trades afterward. The goal isn't certainty. No tool can give you that. The goal is helping you move from emotional reaction to structured execution, so your decisions are more consistent and less driven by the heat of the moment. Quick but important note before you go. Trading futures involves substantial risk of loss. This content is for education only and is not financial advice. Order flow tools can support decision-making, but they do not guarantee profitable results. Most traders lose money, automation does not create an edge, and you should always test everything in simulation first. If you trade NinjaTrader and you want clearer, more structured order flow tools, head to imprint.ltd. There's a free resource waiting for you at imprint.ltd/free. Thanks for watching, and trade with a plan. Candles show you where price went. Order flow shows you how it got there and who paid for the trip. Grab the free order flow kit at imprint.ltd/free.